Ever wondered who controls the world's money? What if we told you there's a company that manages more wealth than the GDP of Japan and China combined? Yes, you heard it right. A company with such immense power and influence that it's almost unfathomable. This isn't a tale of kings or empires, it's the story of a corporate titan, a financial behemoth that casts a long shadow over the global economy. Intrigued yet? Welcome to the world of BlackRock Inc. 1988, the year of the dragon in Chinese astrology, a year symbolizing wealth and power. A fitting year for the birth of BlackRock Inc. 8 visionaries, 8 entrepreneurs found themselves in a single room in the heart of New York City. Their collective dream? To create a company that would revolutionize the world of finance. With a focus on risk management and a relentless drive to innovate, they pioneered a new approach to investment. The initial years were filled with struggle and uncertainty, as any startup story would entail. Yet, they persevered, driven by the belief that their unique approach to risk management would set them apart in the highly competitive financial landscape. They faced numerous challenges, navigated through the stormy waters of the financial world, and emerged stronger. Their relentless pursuit of excellence and innovation transformed BlackRock from a small startup into a financial juggernaut. From a single room to a global powerhouse, BlackRock's rise was nothing short of phenomenal. Scene script. BlackRock didn't just grow, it skyrocketed to the top. But how? Like a master chess player, BlackRock made strategic moves that would ultimately cement its position in the financial world. The pieces came into play in 2006 when BlackRock made its first significant acquisition. Merrill Lynch's investment unit, a titan in the industry, was absorbed by BlackRock, significantly boosting its assets under management. But BlackRock didn't stop there. No, it had its eyes on an even bigger prize. In 2009, it made a move that would forever change the landscape of asset management. Barclays Global Investors, a behemoth with a vast portfolio of assets, was the target. BlackRock made its move, and with a swift stroke, Barclays Global Investors was now part of the BlackRock family. This acquisition wasn't just another notch on BlackRock's belt, it was a game changer. With the addition of Barclays Global Investors, BlackRock's assets under management ballooned to an astronomical level. This move made BlackRock the largest asset manager in the world, a title it proudly holds to this day. But what does this mean? Why does being the largest asset manager matter? Well, in the financial world, size does matter. The larger the asset base, the more influence you wield. The more assets you control, the more markets you can shape. BlackRock, with its vast assets, had the power to sway markets. It could make or break companies with its investment decisions. It had the ability to shape industries, influence economies, and impact lives. This power was not just theoretical. It was real, tangible, and it was felt across the globe. From Wall Street to Main Street, from London to Hong Kong, BlackRock's influence was undeniable. With these strategic moves, BlackRock had the financial world in its grasp. So, what happens when a single company controls more than $8 trillion in assets? Well, that company essentially becomes a global powerhouse with influence far beyond its headquarters. Welcome to the world of BlackRock Inc., the world's largest asset manager. BlackRock's influence is not just restricted to the financial markets. It extends to various sectors and industries worldwide, thanks to its substantial stakes in numerous companies. From tech giants like Apple and Microsoft to automotive leaders like General Motors and Tesla, BlackRock's reach is all-encompassing. But how does this vast ownership translate into power and influence? Well, when you own a significant share in a company, you get a say in its operations and strategic decisions. This means that BlackRock's voice echoes in the boardrooms of some of the world's most influential companies. Moreover, BlackRock's sheer size allows it to shape economic policies. With a portfolio larger than the GDP of many countries, BlackRock's investment decisions can have ripple effects on global markets. Its decisions can move market prices, influence interest rates, and even impact currency values. The company also uses its influence to advocate for corporate governance and sustainability. It champions the cause of climate risk disclosure and pushes companies to align their strategies with a low-carbon economy. But there's more to it. BlackRock is not just a passive investor, it's an active player shaping the future of industries. Its Aladdin platform, a risk management system used by investment managers worldwide, plays a key role in dictating global investment trends. In essence, BlackRock's influence is like a silent tide, subtly shaping the contours of the financial landscape. Its decisions, directly and indirectly, impact our lives, whether we realize it or not. From the price of the groceries we buy to the interest rates on our mortgages, the invisible hand of BlackRock is often at play. So, yes, in many ways, BlackRock does control the market. Its vast holdings give it a unique vantage point, a seat at the table where the world's financial future is being decided. The question is, are we comfortable with so much power in the hands of one company? But is it all just roses and sunshine at BlackRock? Well, like any massive entity, BlackRock has faced its fair share of criticism and controversy. Let's delve into this a bit. One of the most prominent criticisms involves BlackRock's role in the 2008 financial crisis. The company's risk management strategies were called into question, as it held significant positions in mortgage-backed securities, the very financial instruments that sparked the global downturn. But it wasn't just the crisis. BlackRock's handling of conflicts of interest has also been under scrutiny. Imagine this. BlackRock manages trillions of dollars in assets. Many of these assets are shares in companies, meaning BlackRock has a say in corporate decisions. This can lead to potential conflicts of interest, as BlackRock could theoretically make investment decisions that favor its own interests over those of its clients. Now let's touch on the influence BlackRock wields on a global scale. With its vast wealth and reach, BlackRock has the power to shape markets, influence policy, and even sway the decisions of governments. This immense clout has led to concerns about the lack of checks and balances and the potential for abuse of power. So, while BlackRock has undoubtedly contributed to the global economy, it's important to remember that such power isn't without its pitfalls. As with any titan of industry, BlackRock's immense power comes with its own share of shadows.